Now, live from KUSI, this is Good Business San Diego. Sponsored by Wilsey Asset Management.
Hi, I'm Roy Robertson. Welcome to Good Business San Diego, where we're talking about the topics that are important to you, your home, your family. We'll talk about your kids' education today, and as we do each Wednesday, we'll talk about your money. The following portion of Good Business San Diego is sponsored by Wilsey Asset Management. Brent Wilsey, the president of Wilsey Asset Management, is here this time each week, and today Brent's talking about a topic that impacts so many of us. That's the real estate market. Are we starting to see signs of softening in the market? Brent's here with some insights. We're seeing some weakening.
We are seeing some weakening, and I want to talk about the difference on the real estate market, because I'm not talking about just here in San Diego.
Okay.
And again, the real estate market's different in San Diego, California versus Florida. A lot of differences there. I mean, it could even be different in El Cajon versus La Jolla. I'm talking about the national market, because that's such a big part of our economy. It's about $49.7 trillion of our economy. And that's about 16.2% of our entire economy. So it's a big part that I want to talk about, because it can change things. And there are some good things going on. I mean, back in January, the 10-year Treasury was about 4.8%. It's now fallen about 4.2%, and that's important because mortgages follow the 10-year interest rates. So that's important. Last night we had the president speak to the nation, to the Congress. He was positive. I think the numbers were like 70% of people feel good about what he said, and that's important, because if you don't feel good about what's going on in the economy, you're not going to go out and buy a home.
True.
So that's important what's going on. But there are some cracks that I saw. In January, the annualized sales of existing home sales fell 4.9% year over year. Now, that's a pretty big drop. I mean, it was more than the expectation. The expectation was about 2.6% decline. So the sales are declining, which is a problem. One positive thing is the inventory is up about 17%. Now, that could be a positive or negative. The reason why it's a positive is that the more inventory you have, the more homes there are for people to buy homes, and there's more competition to buy those homes. So that's a positive. Also a negative, though, because people say, oh, I can't sell my home now for the price I wanted.
The one thing that the buyers have been waiting for is more available inventory and hopefully better prices. What about other signs of weakening, though? What else are you seeing?
Well, there's other sides, too, and that's a cash buyer. The cash buyer has fallen from about 32% down to about 29%. And I want to remind people, we're here in San Diego. I mean, I think the average price of a home in San Diego, I don't know, $1 million.
About $1 million, right?
We're talking again about the national average is what we're talking about. And by the way, these numbers I talk about, they're annualized. And we do the annualized numbers because if you did it month to month, it'd be too spiky. So we annualize these numbers when I talk about these. But what has actually happened is that they're not doing that as much. And the price of a home here in San Diego, about $1 million. Arkansas, maybe $200,000. But cash buyers are not feeling that comfortable to step in and just buy a home for cash at this point in time. And then also, too, what we're seeing is first-time home buyers, very important, is down to 28%. It was as high as 48%, which is the norm. And the reason being, and we've talked about this for the past year, the affordability of homes is really declining, and therefore your first-time buyers can't afford to get that house at that price.
So real quickly, how are home sellers reacting to this weakening of this trend?
Well, they're kind of disappointed, because what they thought, like, oh, I put my house on the market, it should sell in a month. Well, that's not quite happening. It probably more back to the norm, could take 2, 3, 4, maybe 5 months. And then also, too, delistings, 73,000 were delisted. That's the highest since 2015.
Big changes. Come back and tell us more. It's an ongoing situation.
We'll keep you posted.
Brent Wilsey at smartinvesting2000.com. The preceding portion of Good Business San Diego, sponsored by Wilsey Asset Management. We'll be right back.